So look, there's the summary, folks. We're continuing along the same theme, really. Values in Wellington have been rising for 4 or 5 months now. They started stabilizing in about July 2022. So, and then since then they fell very gently until kind of early this year. And then it started recovering, as I say, about 4 or 5 months ago. Message to buyers continues to be buy now before it gets harder, and sellers, it's good news. Market is firming, values are rising. It's now a seller's market. Pretty good time, actually, to sell. So let's get into it. Here's the median sale price. So 782 versus 820 a year ago. That's 5% down. 5% is clearly still a drop, but it's not 10%, it's not 20%, which we were seeing kind of in the first half of 2022 is where we saw this huge drop off here. And as I said, in about July, I started calling that it was stabilizing. That's about here. You can see the monthly numbers down here. So around about then is when I started calling that it was stabilizing. And you can see it has been kind of pretty flat since then, very gradually dropping overall. And the 6-month moving average there is actually just ticked up for the first time in quite a while. We did have one little uptick there in the very early 2023. And then it gradually fell away ever so gently again since then. So that was a bit of a false peak. Certainly the feeling on the ground, is, and dealing with selling properties on the front line, it doesn't seem like this is a false peak. Values are definitely on the way up. Buyers are more keen to transact than sellers. And so, we're undersupplied and have been for ages. So I don't think that's a false peak. However, it's also median sale prices. And if you follow these calls or my videos, you'll know that the median sale price is not a very good indicator of actual underlying values, because it reflects the mix of properties sold as well as values. Trend is still useful, but the Real Estate Institute House Price Index is the best guide for that. So here are the league tables, and since the peak, since we came off the peak and started dropping, Wellington started dropping soonest and steepest, and so we have been leading these league tables the whole time, pretty much since the peak. So these numbers here are the percentage drop in values since the peak of the market. And we are still leading the league tables, but our drop there at 22.4%, as of about 4 months ago or so, that was around 26%. Can't remember, 4 months, 5 months, something like that. So we have recovered since then. Auckland, the gap between us and Auckland is narrowed. And although Auckland is also recovering now, in fact, most parts of the country are, and the gap between Wellington's overall loss compared to the average in New Zealand has also narrowed somewhat. So if you look at those figures for the last 12 months, so although we have dropped by 22% since the peak, we've only dropped 3.3% in the last 12 months. So that just verifies, or that just validates what I was saying, that since about July, we've been stabilizing. July last year, that is. And interestingly, at 3.3% over the last 12 months, that's exactly the same as what Auckland has experienced and the country overall. So yeah, that's kind of just a coincidence, I suppose. But it just goes to show that over the last 12 months, Wellington has performed just the same as the whole country. In actual fact, within that 12 months, the first 6 months it was falling, and then the last 6 months is overall rising a bit, but hasn't quite recovered over the last 12 months. In the last 3 months, we've recovered 3.5%. The rest of the country, for the most part, has recovered also. But Wellington is leading the charge. So when we came off the peak, we fell first and we fell fastest. We were leading the charge. And when we've bounced and start to recover, we started recovering pretty much ahead of everyone else. And that shows that we've been recovering more, 3.5% versus Auckland's 3%. Not big differences, but nonetheless noticeable. And 2.5% for New Zealand overall. And indeed, if you look at those numbers all there, interestingly, that's all regions of the country. You'll see every region of the country in the last 3 months has recovered somewhat, except for Bay of Plenty. So with that exception, everything is recovering in the last 3 months. And again, Wellington at 3.5% is pretty much leading the pack, except for Otago at 3.6%, which is probably not statistically different from 3.5%. So as I say, Wellington has led the recovery and has recovered the most across the country. Looking now, digging deeper into the different territorial authorities in the Wellington region. So Real Estate Institute defines Wellington region as Wellington City, Lower Hutt, Upper Hutt, and Porirua. There are other definitions out there and some other data sets which include Kapiti and Wairarapa in Wellington, but not this data. So you can see there that, yes, as I say, recovering over the last 1 month, 3 months, over 1 year, only dropped by 3.3%. And the shape of the graphs there is the thing that I always pay most attention to, because it's the trend, not the monthly, because it does still bounce around a little bit from month to month, especially the territorial authorities, but this is Wellington region here. So blue line is the monthly result. And so you can see there that when it's above zero, of course, that represents price growth or value growth. When it's below zero, that's value falling. The blue line is monthly. The orange line is three monthly. And so you can see right there at the bottom there, in May, we were falling by nearly 10% in 3 months, which is a very rapid drop, of course. Since then, the degree to which we were dropping eased until we were almost up to zero in November 2022. And then we dropped back a bit again. And then we recovered, and then we had a blip, and then the recovery continued. So the blue line there, you can see fairly consistently above zero, positive growth, certainly since June, July, August, September. And it was bouncing around the zero since kind of February, January-ish, earlier this year anyway. And the orange line, the 3 monthly result, you can see that quite clearly, the trend. We're now seeing more gains in 3 months than in 1 month, which of course is what you get when you get several monthly gains. As I said, that shows there that Wellington's recovery has been leading the country and leading Auckland. If you look here, this is interesting, and indeed it's a bit of an anomaly. Wellington region dropped 3.3%. All the other territorial authorities within Wellington region, so the city, the Upper Hutt and Lower Hutt and Porirua, they've strangely dropped less than 3.3% in the last 3 months. How can that be? They're all a subset of Wellington, and collectively all 4 of them make up the whole of the Wellington region, according to this data, and yet every one of those results is a smaller drop than the region overall. So that's statistically impossible unless I completely misunderstand the data. So I suspect there's a little bug in there somewhere. And perhaps Real Estate Institute will notice that and make a correction in their next month's data. But nonetheless, it's the trend that's most useful here. And what we're seeing is over the last year, not almost level with a year ago. And that's pretty much the same for all the territorial authorities within the region. So looking now at number of new listings. So this is the amount of stock coming to the market, new stock coming to the market. And gee whiz, that red line there, that's the 6-month average. And that just pretty much says it all. Since early 2022, when we saw vendors all of a sudden decide, gee, we have peaked, prices are now on the way down, let's get our property sold. And they brought their properties to the market in a hurry. Then they realized, oh shit, too late. I've missed the boat. Since then, the number of new listings coming on has fallen away further and further and further, consistently since early 2022. So almost for the last, pretty much for the last 18 months, And what I find pretty remarkable is that this low that we're at now, which is, on average, they're 426, as you can see in the table, that is significantly lower than approximately 500, which was the previous low we got to as a result of all the lockdowns. So when the markets were completely locked down for extended periods of time, we were still bringing more property to the market than we have been in the last 6 months. Now, the sense on the ground on the front line is that we have got a ton of stock about to come to the market, or now coming to the market. So where I am at Low & Co, we have our sales meetings on Tuesdays. The last 2 Tuesdays, we've had between 20 and 25 new listings coming on in each of those weeks. Previous to that, we were seeing 6, 8, 10 in a week. And we have a new listing board in the office and a sales board in the office, and the new listing board in the office shows that, and that's for agency agreements getting signed. That's not properties hitting TradeMe. And so what that's showing is that in October, we have listed about 3 properties a day in October, so well into the 50s now for the month to date, which is a lot of stock. I'm sure we're not the only agency that's experiencing this. So, and we know that in talking to potential vendors for the last number of months, so up to earlier in the year, vendors were not selling because they didn't like the prices, and they could see that property was hard to sell. It was taking a long time to sell, so it was difficult. Only those people who really did have a real commitment and need, a circumstance that was driving them to sell, were going to market. The ones who were a bit more discretionary were holding back. And over the last 3 to 6 months, whilst they can see there is evidence that prices had stopped falling, there was greater liquidity in the market again, properties were selling again, prices weren't crazy anymore, they weren't getting worse. Then they were put off by the election. And so the line has been, very commonly, we're waiting till after the election. So, for a number of months now, we've sort of sensed that October, November, and maybe early December, probably less so December, but October and November, we're going to see a lot of stock coming to the market, maybe also in the summertime after the new year. And certainly the last couple of weeks that's shown that, and our listing board has shown that too. There's a lot of property coming to the market. Interestingly, TradeMe research, it also indicates that a lot of buyers have been holding back. We don't see that so much because the buyers don't come to us in advance. They come to us when they're ready or getting ready. So we don't see that so much from our discussions with buyers, but the TradeMe research has shown that buyers have been holding back till after the election too. So the question is, I'm predicting, and I'm certain we're going to see that red line there bounce and have a significant uptick in October and November. The question then is, are we going to see a commensurate uptick in the buyer activity? If we see the buyer activity increase like TradeMe is suggesting, then that increased buyer activity will absorb the additional, or some of the additional listings coming on. If the buyer demand does not increase, then it might become again a little more difficult to sell property again. Obviously, only time will tell. So unbelievably low levels of listings coming on, but as I say, the October numbers I'm sure will show a significant increase. And there is the average for September's, so 631, so at 452 last September, and even 515 the September before, significantly below what's normal. September 21 to 689, above what's normal. So the remarkable thing really is that, and you can see that clearly in this next graph, in September last year, we were about 25% down on the September before. And then September this year, we were another 12% down again. So we were seeing fewer stocks, fewer listings coming on compared to 12 months prior, which was already a very tight number of new listings coming on. So I'm sure that blue line there, the blue bar chart, will next month be in positive territory, and then of course that will drag the red line, the moving average, upwards over the following months. Obviously, it can't continue to be below the x-axis forever because that would be continually decreasing stock levels. It has to go back up before we see anything like overall stock levels increasing. So, yep, vendors have been on strike since September 2022, but I think October this year, this current month we're in now, will mark the change in that and see a whole lot of stock coming on. So how many sales we're seeing taking place? So 521 in September versus 537. So pretty much the same as last year. A bit of a drop off compared to September 2021 at 657. And the average is 630. So 2 years ago, 657 was a bit above average. Not massively, but certainly 521 is suppressed, is constrained. There's two main things that will constrain the number of deals getting done, of course. One is that, or simply buyers don't want to do deals. Certainly that's not our sense on the ground. Buyers want to do deals. Most listings that are decent properties, that are well presented, properly marketed and sensibly priced are attracting multiple offers. So we're not seeing that there's a reluctance to transact on the part of buyers. So the other reason why it might be constrained is because there's just not enough choice. There's not enough deals to be done, or the finance is not there for buyers. So buyers want to buy, but they can't. Finance is still difficult, from what I understand, not as difficult as it was 6, 12, 18 months ago. So that is easing a bit. And our sense, as I say, is that buyers definitely want to transact, but there's the biggest complaint that buyers have now is there's not enough to choose from. So the lack of new listings, the fact that vendors have been on strike, that will certainly be acting to constrain this number somewhat at least. But nonetheless, still pretty low levels of sales taking place. You can see from that trend, that red line there, we were sort of level. We were stable for about 12 months after reducing significantly since late 2020, early 2021. Over the last 6 months, it's been trying to recover, but it can only go so far, especially, as I say, given the amount of listings coming on. The market has been so anemic. And that's the data in another way. You can see there that the number of deals getting done has been below the 12 months prior since middle of 2021, with one exception there. And then we saw significant increases in May and June, and then July and August. July was below again. August was level. September down below again. Not below by as much, but nonetheless less. So we had a couple of strong months then, and then retraction again. And again, the red line paints the picture. It's trying to recover. It's been on average over the last few months. It has been about the same as a year ago, bouncing around, some over, some under. This is an interesting one here. Median days to sell. How long is it taking to sell property? For some time, obviously after the peak, properties rushed to the market, buyers pulled back. It took ages to sell, and we saw the number of days increasing significantly there. As you can see, we hit a maximum of 69 days here, that was a bit of an outlier. That was January of this year, or is it February? Yeah, one of the two. Anyway, bit of an outlier. For several months, we saw reasonable stability around 50 days. And in the last 2 months, significant falling off a cliff there. And now at 34 days in September, significantly less than a year ago, and even less than September 2021. So way back in September 2021, the market had not peaked yet. Having said that, things were slowing down a bit. You can see here, September 2021 is in here. We were starting to see the days increase, the days sell increase a bit. They did come back a bit, and then before they really took off. But yeah, so before we were even at the peak of the market, things were taking longer to sell than we saw certainly in September. So 34 days is pretty short again. We haven't really seen a lot of times where it's been significantly less than that. I mean, during that whole boom time there, you can see normally it was around about 30. So 34 days, not really too much out of whack with how long it was taking the boom, really. So that really does go to show that it's the market in the last few months has been significantly different to what it was, say, 6 months, 12 months, 18 months ago. So very encouraging for vendors and indeed buyers. That's an indicator that buyers, again, have been more keen to transact than sellers. So they're bringing those properties come to the market, they sell faster. And the same is shown really in the amount of stock represented as a number of weeks worth of inventory. So those of you not familiar with this metric, what this is saying is if we had no more property come to the market and properties that are on the market today continue to sell at the same rate that they have been during the month, how many weeks would it take to clear every listing? And so 10 weeks worth of supply in September. We've been stable at 10 to 11 weeks for the last 4 months. The long-term average for Wellington is 14 or 15. And so if we're significantly below 14 or 15, that indicates technically a seller's market. Significantly above 14, 15, technically a buyer's market. And we were there for a year or so. And then we were pretty balanced for a number of months earlier this year, for the last 4 months, bouncing around 10 to 11 weeks, clearly a seller's market. So look, nowhere near the low levels of inventory we saw in late 2020, early 2021. We got as low as 4 weeks back here in December 2020, and we were at 5 weeks for throughout sort of many months in the middle of 2021. Then as we got later in 2021, started to increase, and the big increase came in early 2022. But yeah, so last 4 months, clearly in a seller's market, 10 to 11 weeks worth of supply. That's significantly undersupplied, less than the long-term average at 14 or 15 weeks. And TradeMe listings, again, you can see the same thing. When buyers pulled right back, fewer deals got done, more properties came to the market, the number of listings available on TradeMe just naturally swelled, and they swelled very, very quickly, going up by up to 160% or something increase up here. Then broadly stable for a year or so with seasonal fluctuations. And then earlier this year, sort of as we approached the end of summertime, March, we started seeing the number of listings available on TradeMe fall right off when we saw some more deals getting done and number of listings really remaining very constrained. The degree to which the number of listings have been dropping has really eased, and we have seen a little increase between September and October. There's typically a significant increase in listings as we come into spring. And you would hardly say that was a big spring rush. Certainly it has been suppressed this year because of the election. As I say, we're expecting to see a significant number of properties come to the market in October. So, and that's the change in TradeMe listings. You can see we had this huge increase compared to 12 months prior, then a significant drop-off. The degree to which the number of listings on TradeMe is less than 12 months ago flatlined a couple of months ago and is now starting to ease. So we will be heading back to parity soon, I would suggest. So that's that, folks. So in summary, Wellington values have been rising for about 4 months now. New listing volumes and sale volumes are low. I have to conclude that sales volumes are at least partially being constrained by the serious lack of listings coming to market, and that lack of listings coming to market is about to turn around in a big way now that the election is out of the way. We're going to see a lot of stock coming on once the numbers come out in October, and I'm sure the same will be for November. Duration to sell has reduced significantly. So duration to sell and inventory are both really low. We've been in a stable seller's market for the last 4 months, and the duration to sell is the shortest time since we've seen since late 2021. TradeMe listings are low, but the degree to which they're reducing compared to 12 months ago is easing. My message to buyers, my message to sellers, is it's actually a pretty good time to sell now. As I say, the one risk for sellers now is We know there's going to be a whole lot of stock coming on. Is the TradeMe research correct? Are there a whole lot of buyers that have been waiting for the election to pass, and they're now going to come into the market as well and absorb that extra supply? Or is it going to become a little tougher with all that extra supply to compete for the buyers? But my message to buyers continues to be, don't wait for things to get better. And a big shout out and thanks to Real Estate Institute and realestate.co.nz for all the data, of course. And of course, my message to you folks out there is, I want to sell your properties. So if you want any advice or anything, come to me. Happy to talk. Maybe next month, I will also include some other general economic data. There's a bunch of stuff happening out there. Of course, we just saw the inflation number. The inflation number come out. So what was it? 1.8% for the last quarter, which brings the total to, I think it's 5.6%. 1.8%, interestingly, was significantly more than we saw the previous quarter. So that's an increase from one quarter to the next. But I understand the numbers, the forecasts are for the next 2 quarters that they'll be marginally under 1% per quarter. And so if that is correct, then that will be a continuing easing of inflation. And the good news about the 1.8% for the quarter is that most of the banks and the Reserve Bank itself were predicting more than 1.8%, not by much. But if it was less than expected, then that would indicate not as much pressure as you might think from a high quarterly inflation number, not as much pressure on the Reserve Bank to increase interest rates again. But I do notice there are more banks now talking about perhaps there will be a need to increase the OCR one more time. And certainly that's a change in mood or sentiment compared to what we've had for probably the whole of this year, where people have assumed, and the bank indeed did project, that there would be no more increases needed. So if that happens, then obviously that would be hawkish and would have an impact. That would probably frighten buyers. So that might have an impact too. So otherwise, it looks like immigration is easing a bit. Not easing, but the gain is slowing down. And we're almost at 100,000, which is obviously huge. A lot of people ask me, is immigration pumping up house prices? I suggest not yet, but obviously a whole lot of people coming into the country. I mean, 100,000 people is 2% of the population. You know, they've got to live somewhere. But most of these immigrants that are coming in, of course, don't qualify to buy yet. So they won't be purchasers, but they will be tenants. They'll have to live somewhere. But most of them go to Auckland. And so that is really supporting the Auckland rental market. The Wellington rental market has been really, really soggy, and especially the segment of student accommodation. The 4-bedroom, 5-bedroom, 6-bedroom, 7-bedroom places, very, very soft indeed, rents falling. But my take on things is that that soft market is now stabilising and starting to improve again. So fingers crossed Victoria get their act together. I did notice that they have put a whole lot of that they've put out an RFI for a bunch of real estate agents to pitch to sell like 20 houses or something owned by the university that they have had for some student accommodation or some offices and I don't know, maybe accommodation for lecturers or whatever. But obviously that's not a good sign that their numbers, their finances are must be pretty dire if they're looking to sell 20 or so houses to prop up their revenue statements. Anyhow, hopefully they get their act together and the number of students comes back and supports the market here in Wellington again. We'll call it a month, and see you next time. But of course, if you need anything, you want to discuss your plans or get any individualized advice, just sing out, you know how to get me. All right, folks, thanks so much. See you next time.